To do that, and Google just posted this video extolling the virtues of nuclear power. I mean, think about that, right? Next is going to be pop culture, embracing nuclear power. The bad, scary times. They gave us some great music like 1999 from Prince, but nuclear is the answer, I guess. My next guest says, yeah, embrace that as an investment as well. And of course, he's been telling us this for a while. Let's bring in Main Street Asset Management Chief Investment Officer Aaron Gibbs. And Aaron, it's so interesting because I know you and I talked particularly about uranium a few months ago. Yep. And like every day, there's more stories on this.
I know, I love
every day
it.
There's more news announcements on it every single day. And it's like you cannot ignore it. This is the real deal, right?
Yeah, look, when it comes to all these announcements that are basically all about U.S. demand, so the U.S. is finally changing its tone. Look, we're not going to see that uranium needed for 2, 3, 4 years. But uranium is already highly in demand because China has been building nuclear, and that is where they want all of their energy to come from. They may not be as concerned about clean energy, but they know it's one of the most efficient ways to get energy.
Right.
And so we know that China's already been buying up. Europe has already been ahead of the curve about opening up more nuclear plants, and particularly in France. And so we already see that increasing demand. Unfortunately, right now, uranium prices are still very tied to like what the sentiment is around Chinese growth. So it is still very volatile. I'm not saying that this is like a stock that's like steady and stable.
Right.
This is not my typical pick. You do have to worry. It's very commodity based. There is some volatility, but long term, the ultimate ramp up is everybody is opening more nuclear plants, and there's going to be more demand.
So, and that's the way you play it rather than, say, the utility stocks themselves?
Yeah, I think there are a couple, I found a couple ETFs that are based off the uranium miners, really well diversified. You know, they get into stocks that we wouldn't normally be able to get to, like a miner in Kazakhstan, all over the place, right? So it's still, the ETFs are still very traded closely to the price of uranium, trading like a commodity, a lot of volatility, but ultimately the prices are really starting to move up on the commodity side, and mining, the actual production is going to increase. And so these are the guys that are going to make the profits off of that.
Small caps. You like the S&P 600 more so than the Russell 2000, but the bottom line is you really feel comfortable in small caps right now.
Yeah, and also the S&P mid, anything that basically isn't that 500. I just find for a long time, look, I know I was a little early with this call. I liked them when they were underperforming. They finally are coming around. But I think just from a risk-reward perspective, again, you're getting in at lower valuations. GDP looks good for the U.S. We look like we're on solid footing. Maybe we don't get as many cuts as we all hoped for, but ultimately the economy is chugging along very nicely, and I think ultimately those are the businesses that are going to profit.
So the economy will be enough to add to the value proposition if the cuts aren't there, because a lot of folks are worried about maturity walls and that kind of thing, profitability of these smaller names. Maybe with rates coming down, it'd be easier for them to survive. But
absolutely, you'd get, obviously you get more of a boost and more of a valuation expansion, but ultimately these guys are so cheaply valued. It's just a really safe entry point, and I'm betting on the U.S. economy doing well. Bottom line, you like the risk and reward. I do. All right, great seeing you. Thank you. Did you know that song? Absolutely. All right. I love that song. Thanks a lot, Aaron. Hey, folks, we'll be right back.